This is a question that comes up a lot. What is a 1035 exchange? I'm going to keep it simple, and I'll let Ryan go into a little bit more detail here. But 1035 exchange is just money that you have at a company in a product, and you exchange it to another company with a similar product. So it has to be like to like in most situations. You can't take a tax deferred entity and put it into a non-qualified tax event on an exchange of funds, but it's simply when a company transfers your money to another company versus you physically holding that money and then moving it. So taking money from a company that you have, and then you have possession of it, and then you send it to another company. That's more of an indirect rollover, where 1035 is basic, and it's really the best way. Ryan, talk a little bit about the tax liability in an indirect rollover versus a 1035 exchange, because somebody could get themselves caught in a pickle. I mean, it's not
yeah, no doubt, no doubt. Yeah,
yeah.
so if you're doing like to like, to your point, well, where you're transferring funds from one source to another, that 1035 exchange avoids any penalty and or taxation. So there's a paper trail to the IRS. So if it's it doesn't matter even if it's non-qualified funds, it doesn't matter. There's still a paper trail of what you've done. So there's reporting that goes on and says, hey, they've closed this account. They send a document to the IRS showing that you've closed the account. Now you need to connect the dot. You need to connect A to B. So B meaning I've transferred